for the last style bender. Wow. Woo.
All right, hello and welcome to Camel Finance. I'm your boy Camel, and today I mostly want to talk about the charts today. I've got a lot of positions open for me anyway. So I want to, when things are going right, okay, like they have been, when things are going well, when you've got a lot of open profit on the table like we've got, I think it's important to make sure you stay focused, to make sure you understand at what point things technically stop going your way. Where does invalidation occur? Where do we have to lock in profit? What levels do we have to be looking at to know that it's time to exit the trade and walk away with some gains, ready to sit on the sideline again, waiting for the next best setup to come to us? So if you're new here, if you haven't been on the channel before, then this is the Meltup scenario that I proposed all the way back here in the summer of last year. I said that I think we were not quite as bearish as everyone was championing at the time. I thought that we weren't going to have this 2008 style plunge. I said that we're likely going to put in some kind of inverse head and shoulders pattern, breakout, and then we'll have this melt up, which will be mostly driven by the markets front running a pause in the Fed hiking cycle, followed by them banning Congress from owning stocks at the top here, just like they banned the Fed officials back here. So if you're new here, you won't have seen this before. We're going to get to this a bit later on. Of course, if you've been here before, then you are more than familiar with this idea. But just before we do that, I've got a few pieces of Bitcoin fundamentals to show you, which I'm really happy with. So I'll show you those and then we'll get into some charts. First things first, the hash rate in orange here for Bitcoin, as you can see, is going parabolic, absolutely skyrocketing. So the network is more secure than it's ever been. At the same time, the percentage of supply that was last active 2+ years ago has just hit a new all-time high. So again, people continue to hodl what is the only secure database on the entire planet. And from hash rate to miners, we've got a new Bitcoin miner, BitDeer, just been listed on the NASDAQ. Another potential way to get exposure to Bitcoin without having to own Bitcoin, and a way to play a higher beta move without necessarily having to use leverage. You can always long Bitcoin miners. This is by no means a recommendation to buy BitDeer. I actually don't know anything about BitDeer, but as you know, if you've watched the channel before, I like to play a bunch of Bitcoin miners, such as RIOT blockchain, for example. Meanwhile, did you know the dollar has lost 98% of its purchasing power since 1971? And this is likely a trend that we're going to see continue. This chart here is from Kush, and you can see that Kush is calling for 89 on the Dixie. Now, I personally have had 95 to 96 as my target. I think if we can get to 95-ish, then we will certainly see massive risk on rallies across the board. I think we'll see Bitcoin and gold and silver really benefit from this dollar weakness. But imagine if Kush is right here and I'm wrong, and we do get all the way down to 89. We are going to see this melt up that I'm calling for look even more spectacular than I think is possible. Heading into the charts, the dollar still contained under this red downward sloping resistance line, isn't it? So we had this sort of false dawn, back down. The key thing here to watch is that we made a double bottom for now at this local low from back here in February. So some level of bounce could be expected here. But if we lose this low, I think that opens up this move down to the 95-ish region, where I've been calling for since, I can't even remember, since all the way back here somewhere. So things continue to play out the way I expect them to play out. Of course, I'm open to seeing some sort of breakout and bullish repair or a counter trend bounce. But to be honest, unless we can get above this downward sloping yellow resistance line, then I don't think this melt up thesis becomes invalidated just yet. The US 10-year yield, as you can see, kind of catching a little bit of a counter trend bounce, but this could well end up being a lower high that resolves to the downside. So we'll have to see about that. We know we've got the FOMC just around the corner, and at the moment the CMEs are pricing in a 80%-ish chance of a 25 basis point hike. But as long as the market has kind of already priced that in, then we shouldn't expect too much in terms of shocking price action or surprise downside moves in the stock market, since it's already priced in, right? It's a very similar story for the US 2-year yield, as you can see, catching a little bit of a bounce, but still, as it stands, currently a lower high. So get above this and we could see some pressure come onto the risk assets, but get rejected here, and I think we can continue to see further upside in the stock market. So speaking of the stock market, here's the S&P. So undeniably, we broke out of the downward sloping blue bear market resistance line, came back, had a little bear trap, then recovered it. We've since repaired this purple trend line and are now holding back above this red support line on our way to what should be a cycle low due around the 9th of May. So as I said at the start of the video, where are we wrong? Well, for me, this yellow line is quite steep, so I don't put too much weight on losing this upward sloping yellow support line, but lose this red upward sloping support line and we have to start to entertain bearishness because this will be a loss of support. Now you'll notice if I copy and paste this trend line and connect these lows from down here, for me this would be the absolute final line in the sand. I would not want to see this bottom red line taken out. So an early warning sign would be the yellow line if we lose that. If we close below the upward sloping red support line on a daily closing basis, that would be a severe breakdown in my opinion. But get below this final one here and we have to entertain that there is no melt up. And this is where we're completely wrong on further bullishness. The NASDAQ, I think, is much simpler. It's a much simpler read because we've got a clear established trend line up here in red. So for me, all the while we're above that, then we can continue to look for higher numbers in the NASDAQ. But if we lose this upward sloping red support line, then I don't want to be anywhere near longs for the NASDAQ. The Dow Jones is likely going to run into an area of resistance up in this box. I'll be really surprised if we just hot knife straight through here. So some kind of rejection or consolidation in this zone perfectly within the realm of expectation. But again, we've kind of got this trend line setting up here. We've got a steeper one here. If we start to lose these levels, then it's time to start to think that the structure of the market is not quite as bullish as we had originally hoped for. However, all the while we're above these levels, I don't see any reason for concern. New lows for the VIX, as you can see here. So again, this doesn't really speak to a stock market plunge, doesn't really speak to further volatility or downside in the stock market in the near term. Now things can change and they can change quickly, but they haven't changed yet. Also, the compression of volatility is what you would expect to see as a new trend develops. So all of these things are starting to align to tell me that we have left behind the bear market lows in October. We aren't going to take those lows out anytime soon, and therefore we can expect further upside from the equity markets. Here's Apple. So Apple, as you can see, very clearly established uptrend, the support line here in blue. Now, all the while we're above this, it's reasonable to expect further upside for Apple, and that is my primary expectation. But like I said, over and over again, it's important to know where we're wrong, and we're wrong if we lose this level. So get a breakdown from there, and I'll be taking the profit and looking to sit on the sidelines waiting to see when the next setup occurs. Nike, a relatively new position. We're looking to clear these highs. If this truly is a bullish breakout, it will clear these local highs from back here. So as long as we can do that, then happy to continue to push the trend and look for further upside. However, again, it's important to understand if we get rejected at these sorts of levels here and start to roll over, that is not a bullish look. And this is likely going to turn out to be a failed breakout. So happy to push this trade just like all of the rest of them. But like I said at the start of the video and a couple of times since, it's important to know where these lines in the sand are and where we are wrong on our trades. Here's Bitcoin. So my thinking on Bitcoin is that we've had one move here, big drive. We had another move here, big drive. And now we've got this smaller one, right? So this is clearly losing momentum to the upside for now. Now, it doesn't mean that we couldn't pop up, in which case we could have an equal magnitude move as we've had the last few times. But this current price action does tell us that perhaps momentum is waning. Now, if momentum is waning, it's not the end of the world. We know we got this cycle low due around the 9th of May. We just have to be open to seeing a cycle high come in any day now. Now, that doesn't mean that there isn't a week and a half left of upside before then coming down and finding that cycle low. But it does tell me at the moment that we should be somewhat proceeding with caution and not adding to new positions here. There's no reason for me to duck out of this trade just yet. We also have to be open to seeing a touch of this upward sloping red support line or a retest of this range breakout in yellow here. So anything and everything is on the table. As it stands, of course, long and strong continue to push, but we know where our levels are, right? We can come all the way back down to here, to this yellow level, and still remain in bullish structure. We can even come down and touch this red support line and still remain in bullish structure. But losing this would be a early warning sign that this move is a lot weaker than it looks at the moment. And certainly if we lose this, then all bets are off for the bulls. So it's important to know your levels. It's also important to have the situational awareness that on the 9th of May, give or take 6 days, we're going to see a cycle low form. And so it's important to respect that cycle low, know that that dip is coming, and also not get shaken out by it. Ethereum continues to pop up, so we love to see it. Now, again, clear trend line, isn't it? So all the while we remain above this trend line, then we are still in bullish structure. But if we break down, if we lose this level, then we have to cut the trade and respect the risk. Because if we lose this level, there's nothing to say we're not going to do something like this, right? So always respect the levels, always know the levels ahead of time. XRP, for me, it seems to have established a nice trend here. So I'm looking to respect a breakdown of this level. Coinbase is still sideways, isn't it? So there's not much more to say about that. I'd like to see this thing try to get up here and break out of the range. That would be really nice, but it just doesn't want to do it at the moment. So remain long and strong, continue to push. Because it's still sideways, there's not really any invalidation. The stop loss here would be the invalidation for the trade. MicroStrategy, however, you can see we've got a clear uptrend established. Again, we've got the top of this range breakout. Now we should be open to seeing a retest of that at some point, but we want this support to hold if we're going to maintain an uptrend. Same deal with RIOT, as you can see. So we want RIOT to hold if we're going to maintain this uptrend. Now, we have to be open to quite a big pullback into this support, and that pullback could align with that cycle low due around the 9th of May for Bitcoin. That would be perfectly reasonable to expect. But if we start to lose this level, if we start to break down from here, then it's important to walk away with the profit that we've locked in and look for a new entry. Marathon, it's the same sort of deal, isn't it? So we've got a nice breakout here, nice range breakout, still targeting higher numbers. We have to be open to seeing a retest of the range breakout and perhaps one that aligns with that cycle low for the 9th of May. So for me, the level is this breakout level for Marathon. If we lose this, then we've got a failed breakout, and I don't want to be anywhere near longs for Marathon in the short term. It's worth noting here, please don't confuse any of this. What I'm saying is as bearishness. I haven't flipped bearish. I haven't stopped championing this melt up move, okay? I'm sure if you've been on the channel before, you know about this. I still think this is playing out. I still think whether we get a 25 basis point hike or a pause or two more 25s and then a pause, I still think the market is going to front run this pause. I still think Congress need to be banned from owning stocks for ethical reasons. Okay, that's what they're gonna tell you. Of course, it's not ethical, but they're gonna let Congress out of the top. I still think that's what's gonna happen, just like they let the Fed out of the top back at these highs here. So I still think that's gonna happen. We're still seeing the likes of Pelosi buying Apple shares and stuff only a week or two ago. So I still think they're going to blow this thing off. The market's going to front run the pause. I still think this is all going to happen. It's not that I'm bearish. It's just that when you get a big move underneath you, it's important not to just go away and fall asleep and then wake up one day to find that all your profit has been given back. It's important to know where the trade has lost momentum, where the short-term trend has shifted, and it's important to exit so that you can actually put the profit in your account. Here's gold. So gold right into that all-time high range, isn't it? From back here, from here, and now just touch the bottom of it. We have a clear trend line established. For me, if we can lose this level, then I think that opens up a nasty deep plunge for gold, which I would love to occur. And I would love to draw a trend line and trade the trend line break of that. Whether or not that happens remains to be seen. I would even be tempted if we did something like this to short this breakdown here. So that's kind of my primary expectation for gold. Now, will that happen or not? That, of course, is to be determined. Where am I wrong on this idea? Well, I'm wrong on this idea if we come up here, consolidate, and then break out. And that is why this long is lined up currently. If we're going to break out above the all-time high range, then it's reasonable to expect at least a $200 or $300 move before we get any kind of pullback. So that trade is lined up. We know that we can go short if we get rejected here and break down. And we know that we can go long if we break out. So we're covered in all options. Silver, as you can see, we've got a really nice tight trend line here. So this is being respected until it isn't. For now, I remain long and strong and continue to push. I also added a silver junior miners position here, SilJ. As you can see, we are still well above this blue trend line. We have our stop in place to do the worrying. Precious metal miners got some room to run, as you can see, and the same is true here. Similarly, though, we have a clearly established uptrend. This is very steep. I kind of expect this to break in the not too distant future. If it does, then I think I'm going to take some exposure off just because, as you probably can tell already, I've got so many positions. I've got like 20 something positions open at the moment. So I'm more than happy to take a bit of exposure off. So as I said, don't mistake this for me flipping bearish. There's no reason technically to flip bearish. We are still making higher highs and higher lows, as you can see here from the SPY. I still think we are moving towards a blow off top or a melt up, whatever you want to call it. And I still think that this thesis, this hypothesis, is going to turn out to be true. Now, I don't know. As always, I never know anything. But so far, the VIX, the dollar, everything is compressing. The dollars should come off. So I think everything looks set up for us to see this big blow off top move in the markets. However, as an experienced trader, somebody that's been doing this for more years than I care to remember, I can tell you from experience that once you start to get a bunch of profits locked in, once you start to get underneath a bunch of these trades, once everything starts to go in your favor, like it has, like all of these positions practically, out of 20 something positions, nearly all of them are in profit. And the ones that aren't in profit are or around break even, like this or SilJ, right? So I can tell you, when you get into a situation like this, it's easy to fall into the trap of thinking you're the best trader to ever touch a chart, right? But it's important to stay humble. It's important to know your levels. Where are you wrong? Where is the market moving against you? And how can we get out, making sure that we walk away with this profit? This is hard-won profit here, and I don't want to give it all back. I certainly don't want to let all of this profit flip into getting 20-something stop outs, okay? That is unacceptable. So we've gotten underneath the squeezes. We've gotten underneath the pumps. Now it's time to know where these levels are and know how to exit, making sure we at least move away with some profit on the table in the worst case scenario. In the best case scenario, we continue to melt up. All of these charts continue to do this, okay? And then at some point in the near future, we choke the stops up and walk away with a much nicer chunk of profit. But like I said, it's all about staying humble. It's all about understanding that you don't know what's going to happen. I certainly have no idea. I just want to make sure I lock in as much of this open profit that I've got as possible at the moment. So hopefully you found this helpful. Hopefully you enjoy the rest of your weekend. And until next time, I'm your boy Camel. Take care from me. All the best. Cheers. Bye.